The Ant IPO in China is no longer going ahead. What does this tell people about the investing landscape in China and beyond? So it was announced that the Ant IPO, which would have been the biggest in history, is no longer going to go ahead. Now we don't know, they might come back and they might decide to try it again and go down a different route. But it actually happened barely 2 days before it was due to IPO. And the interesting thing is, it shows a number of things. Firstly, in a country like China, of course, the authorities have a lot more power than they do in most countries in the world. So it always shows that even if you could have got access to the Ant IPO, it was always going to be risky. And likewise, for any future IPO, you always have to be aware in such a system that this kind of thing would happen. Number two, it does show some of the differences between the Chinese market and also some Western markets. Because the banks were saying in China that some Chinese people were even getting money from their bank, in other words, debt, and they were going to invest it into the Ant IPO stock. And it reminds me of 2015. If you look at the charts of the Shanghai Composite, the Chinese stock market in 2015, there was an absolute incredible run up and then down. And a lot of Chinese people that I spoke to at the time said that a lot of people were actually basically just speculating sometimes on debt, and this led to a huge bubble. And we see the same thing time and time again. So from 2014, especially, 2004 to 2006, especially the last year before the height in 2006, 2007, Chinese stocks went up by 300, 400, 500% and then crashed again. So the Chinese stock market is much more volatile than the average market, even because the consumer is still very likely to speculate even to a greater extent than in other markets. And moreover, whereas the S&P 500 and our developed stock markets are mainly controlled by institutional investors, so banks, hedge funds and so on, the Chinese market, there's still a big percentage of the market controlled by individual producers, or should I say individual people. So that means that it's much more likely to be volatile. The analogy I would make is this: the small cap markets in the developed countries, say the FTSE small caps index in the UK, it's much more controlled by the small time investor, more similar to the Chinese market now. So that's one of the many reasons why the Shanghai Composite and even the Shenzhen Composite is more volatile than the Hong Kong or UK or US stock markets. I think that will change in the future. I do think more and more institutional investors will get involved in China. I think the Chinese authorities will allow foreign institutional investors to get into the market. It will mature as a market, but right now it's still very much a developing market because the way the capital market works in China is fundamentally different to many of the developed markets out there for the reasons I alluded to.